Good afternoon, everyone. It's Chris from Solstice ATR. We are on website, Twitter, Instagram, as well as Discord and YouTube. If you like this video, make sure you hit the thumbs up, subscribe. It's the weekly free overall market outlook. Remember, we do this for illustration use only. We're not a broker dealer. We use our past performance does not indicate our future results. Use at your own risk, and you need to get permission in order to copy this material. We trade commodities, equities, ETFs, futures, Forex, Bitcoin, Ethereum, and a couple of others. Make sure this is a learning curve. Don't put money on the line unless you know what you're doing. Let's go to the first slide. And what I want to do on this weekly, make it very short and brief. I put some of the sectors for the next 2 months. I put gold, USO, S&P 500, Nasdaq, bonds, Vanguard, XLF, spiders, some bond sectors in the corporate market as well as the global markets. Remember, we have to adjust to the condition in the stock market. Why do I say this? If we look at last year's range in the S&P 500, we were in a downtrend till October. Then we rallied up in December. That was our low in January. If you look at the range from August till the bottom here, we are in a wider range in order to clear this area, in order to run. We are in an uptrend. And we can see we've been consolidating for the last 5 weeks. This is week 1, week 2, week 3, week 4, week 5, and week 6, range bound until we break out. We have the 116 simple moving average just right above us, and we need to clear the combination of the S&P, Nasdaq, Russell, and the Dow in order to run up further, or do we fall further back down? Let's go to the next slide. This was in last week's video. I had mentioned about the economy earning inflation. We have to keep an eye on the inflation, the federal policy, and the systematic risk, as well as the global market for liquidity. We have to keep an eye on, are we going to get a soft landing? Are the Fed's going to stop interest rate? We're going to pay to the CPI attention as well as the employment. So these are the three things. We can have a declining inflation with a soft landing, or we can have still high inflation with interest rates keep going up. And we have to pay attention to the charts, what they offer us, okay? Let's go to the next slide. In this slide, I put some of the commentary in here. What I wanted to do, key factors in domestic and global markets. You can go step by step. And if you have any questions regarding the overall market, this is a 5-year history on the S&P 500. We can see we were in a downtrend. We reversed back since the Silicon Valley Bank and, the Fed stepping in and JP Morgan. This was our March low. We have to pay attention to it. And in January, very important area. Once again, we can see the August and October low, which is a wider range. And since January and March low, that 41.95 is a very important area to clear, in the 116 simple moving average. We still have the 200 right underneath this. So we are range bound in the last 3 months from February, January, March, April, and May being sideways so far. Let's go to the next slide, and I want to break it down a little bit more into more open daily range, 2 days instead of using 1 day at a time. I used for each candle 2 days to show you the downtrend that we broke out of. This was our August. This was our February low of 2022, the 41, 114.65 in the SPX. If I draw a line going across, we are in this consolidation and we are sitting basically on that number. Do we break out and clear the 200 SMA, which is in white, and the 250, which is in baby cyan or blue? If we clear that, we run up. This is the 18 SMA sitting right underneath us. It's in green and red, and the 50 SMA is in yellow, and the 116 lower. Are we in a uptrend? Yes. Are we consolidating here? Yes. So we have to pay attention from the value area high to the value area low, or the range that we are in these two areas from the March. I did not put a post which was the February high here. I should put that, and I should put this is the May high. So more importantly, we have to pay attention to what the charts give us in order to get a breakout or a breakdown. Let's go to the next slide. And this is the slide where you can check us out. You can get in contact with us, give us your commentary. Let's go to the first slide I have here. I put the E-mini, which is the S&P 500, and I wanted to show the daily. This is a 6 months range from you can see the October, December area, the January low, the rally till February, and then back then. I know I'm repeating myself. This was the March low. We had the rally. Then we got this consolidation in here. What we want to do is pay attention to that 50 simple moving average on the daily chart and the 116 in case we come back here. Is there an opportunity to buy this? Yes. If we break up, is there an opportunity to clear the 4,200 and continue higher? Yes. So we take this range here. We either duplicate to the top or duplicate to the bottom so we can get our ranges in the profile. Let's do this on a faster time frame. We're going to go time frame intraday. We're going to use 30-day range. And what I want to do, go down to 4-hour chart. In the 4-hour chart, I have the overnight area. The overnight area can always tell us if there is, momentum to the downside or upside on the reversal. This action happened in the overnight, this gray area. This is a gap here. We've been range bound in this consolidation, and we have in the overnight here a small gap up as well. So if I take the overnight action off, I go in the futures and I uncheck it and I push apply, you can see where the gaps are. So we can get a little box from this area, connect this low here to this low here. And if I go extend, edit the property, and I make it a little bit to the dark side, what do I want? Let's say I want to push it till the 6, correct? And I push it, it shows us that area. If I do the same thing between here and here, there's a little tiny gap that most people won't see. Edit the property. We're going to go till the 6. And I wanted to show this. This is an area where there's a gap up. So those two areas are still virgin areas until we resolve out of this area. So far, this low here, we tested it, we broke back up, but we are inside that big downtrend candle on the 4-hour. In order to clear it, we have to clear this backside of this channel in order to continue higher and clear this gap to fill to the top. If we fall in this area and fill this gap, do we hold this area or do we fall to the backside of this channel? Very important. This is showing you the S&P mini contract on the charts because I use the mini contract myself. It has a lot of fibs, a lot of information on it. I didn't want to overwhelm people. We're going to do the same thing as well to the micro NQ. This is very important on the micro NQ. We're going to go back before I clear this chart. I want to go to favorite. I'm going to go to daily and I want to do 6 month down here. Same thing. But what I wanted to show on the Nasdaq 100, since the January low here and the February high, this was our March low. The rally for April, you can see that was the 31st. This was the April high. We've been consolidating in this upper range on the daily chart for almost a month and a half, or you can call it 30, 60, 50 days in that area. So I want to see if there is an opportunity on the daily chart on the Nasdaq in order to get a breakout or a breakdown. In the last 5 days, if you count this 1, 2, 3, 4, and this is 5, which is Friday, we are in an uptrend, but we had the Friday sell-off and we got brought back up. In order to break up, we need to continue higher or not. We have to pay attention to the annual chart on the daily. You can see where the August is and where we are today in this consolidation on the Nasdaq. While the Russell and the Dow a little bit weaker like the S&P, but the Nasdaq has given us more information. Pay attention to XLK, pay attention to gold, and we're going to pay attention to Bitcoin. Bitcoin in the last week or so has sold off. What I want to do is just show you BTC as is. We're not going to talk about other than the consolidation. This was in an uptrend. I have to move. You can see it. Uptrend linear regression uptrend. I moved this just manually. I put linear regression channel. We can see we are coming down in a downtrend. Does this find support where the breakout is between the 25.3 and the 24.300, 200, and or this area, the 116, where we can find a bounce, or do we reverse back up? What I want to do is put an oval here. And I want to put an oval here in case we reverse. I want to put an oval in this area, or I can duplicate it. What I can do, edit the property, duplicate drawing, grab it, and pull it up here. And this will give us the two ranges of the linear regression uptrend, downtrend. Do we find support at this 38% or 61.8 coming back down in order to bounce back up? And that would be a great area if it finds support and reverses back up in BTC. Let's go back now. What I wanted to do is just show you the bond market IEF, and I'll do the IEI. We'll do the IEI instead, the shorter term. We can see that there is consolidation in the 3-7 year bonds. In order to break out, we have to pay attention to the TBT or the JNK in relationship to the global market. We are in consolidation, trying to make a decision what the Feds want to do, as well as the global economy. They're doing a little bit much better than us, but we have to pay attention to the Euro, Asia, as well as the Australian markets in the global markets. And what I'll do, I'll show GLD here, the ETF for gold. We can see that the gold is in consolidation. It retraced back a little bit. If I go to the weekly time frame and I go 5-year weekly chart, we can see that we had three reversal. We had the down move, then we had the push up. This is considered a cup or a shoulder here, and a push-up. In order to break out, we have to keep the 18 SMA in this backside of the channel, that 181, 182 as support in order to break out. And if we get a breakout, you take the distance from this candle here to this candle, duplicate it to the top for extensions. And if we fall from here to here and we cannot hold the 50, you take the extensions to the downside and you will find support at the 200 SMA and the 61.8, as well as the 50 simple moving average on GC or GLD. Let's go last but not least, I will do XLK. XLK on the weekly, you can see that's the tech bubble. That's the tech. You can see that nice, the August range up here. We are in this range in the last 5-6 weeks. In order to break up, this is our oval to the upside. And what I can do, go to the daily, and you can see the ranges. I have them here, and I have the fibs. Let's see what the market offers us. Let's go back to the E-mini contract, S&P micro ES. And what I wanted to do in the micro ES, just make sure that everybody understands we have been range bound, and this is our February high and our August high. We can see that there's a little gap in here. If I put it in here, between here and here, this is our gap to pay attention to. If we clear it, we'll look up for the August. If we fall down, we look for the 200 SMA. I hope this video was very helpful this week. I kept it short and brief. You can check us out on the website, give us your commentary, get in contact with us. Take care, enjoy your weekend, and happy Mother's Day.